Happy 2021. Welcome to our first episode of the Trading Bell Show. We're glad that you managed to join us. Well, on this first edition of the show, we shall be speaking to Mr. Geoffrey Odundo, the CEO of the Nairobi Securities Exchange. He'll be putting in motion what to expect in 2021, what are his predictions. 14 listed companies last year did announce they will be making profit dips. Will the turbulence continue or not? All this coming up shortly. But first, let's take a look at his profile.
Geoffrey Odundo is the Chief Executive of the Nairobi Securities Exchange PLC. Mr. Odundo, an accomplished investment banker, has been in the financial services sector for the last 26 years, 20 of which have been in the capital markets in various senior roles in asset management, corporate finance and securities trading. He is currently a director of the Central Depository and Settlement Corporation Limited, director of the NSE Clear Limited and a trustee of the NSE Fidelity Funds. He is a member of the Central Bank and Consolidative Forum for Domestic Debt Market and a council member of the Institute of Certified Investment Financial Analysts. Mr. Odundo is also a director of the Association of the Stock Exchanges of Africa and is a member of the Thomson Reuters Africa Customer Advisory Network. He holds a master's degree in strategic management and an undergraduate degree in mathematics and economics. He is also an advanced management program graduate from Strathmore Business School.
Happy New Year and welcome to the show.
Thank you, Abby. Nice to be here.
Looking bright and sharp as ever.
Thank you. Thank you.
All right, Mr. Odundo, let's just begin by, of course, we are right into the new year. It's January, a lot of expectations, a lot of optimism, a lot of hope. Does the same apply to the stock markets, which we did see over 14 listed companies did announce profit warnings? Is it going to be a better year or not?
I don't know how to define 2020 because we came to 2020 with a lot of optimism that this is going to be the fairest year for us, because 2021 is the year that a lot of activities take place in Kenya.
Yeah.
This is the pre-election year. We have the whole discussion around the referendum and all these matters. And so 2020 for us was really the year that we were hoping to accomplish a lot of things, especially from a trading performance. But as everybody saw in March, the impact of COVID was a total surprise to every sector in the economy. And for us, it was a real impactful one and caused a lot of change of thinking on how we were going to encounter the year. And so we've ridden the curve, we've ridden it very well. I must say we've been fortunate to have invested heavily in our business continuity operations and all the aspects of our business to ensure that we're able to trade highly remotely. And with that, we must say that we are sort of closing the year well ahead of our expectations, so we're happy with that. Right. And so 2021 for us is really the recovery. I think, and I know we'll go a lot into discussing companies. A lot of companies have a total rethink of their business. Some have even changed their businesses. And so it's going to be the year of recovery. I think it's the year of real resilience of businesses. And as a market, we are positioning ourselves to really treat this as a very, very normal year. So all our projections that it's going to be a pre-election year and hence we needed to have certain contingents, I think we're going to leave that out. We're basically going to focus on business and really work very hard to ensure that the post-COVID recovery period is actually highly successful.
All right, interesting insights. And Mr. Odundo, of course, there are some of the best performing stocks in 2020. We've also seen some stock predictions of 2021. But from where you sit, how will the market perform right now that you're seeing it's back to school for many households, back to work? We don't know whether the government will ease the restrictions further, but generally sitting in the cockpit of the biggest exchange in East Africa,
yes.
What is in the horizon really?
I like what you've just said about the cockpit. I didn't know I sit in the cockpit. I think, first of all, Abby, I want to just say that a lot of the companies that are on the exchange have had a challenging year in their businesses. And I think they've gone to what I consider an all-time low of their performances. If you look at, as you rightly said, 14 profit warnings, it's not a surprise anyway.
Sure.
Because what we have is a very systemic challenge for the whole economy. So there's no one company who can attribute and say our business failed for any other reason. I think COVID has cut across all the sectors. But I think what has happened, these companies have totally remodeled their operations. Digitization and remote working and all this IT innovation around business and products has taken root. Probably there were all these initiatives, but they were not taken to the front or given high attention. Yeah. But you've had to give it high attention.
All right.
I mean, at the exchange itself, we have almost 95% remote working today. We'd never envisaged a situation where even our brokers would be working from home, but that has happened. So that total paradigm shift from a very old way of working to a new way of working, a new way of products, is really going to help companies propel to a new high. I see companies doing saving heavily on costs. I see them enhancing their revenues through maybe a lot of change of sales strategies, more digitization, more use of internet and media and all these kind of things. I can tell you, I was a bit surprised the other day when I was told that today I don't have to actually go to a supermarket. I would just call one of these farms that do this business, e-commerce, and I purchase everything, and it's all delivered intact. Now look at that, online shopping, something that we never envisaged would take root in Kenya is taking place.
Sure.
So there's going to be a lot of that change of dynamics, and so the companies that have repositioned themselves to take advantage of COVID to remodel businesses are going to do extremely well. But speaking to our listed companies, I think everybody is extremely positive about 2021 and the post-COVID period. I think, first of all, is to really applaud the government for putting in place restrictions that have ensured we are sort of mitigating the impact of COVID.
Sure.
It was a good reason to keep children away and ourselves also to the stay-home requirements. I'm pretty optimistic that firms are going to do well. They're definitely going to do better than where they are today. Sure. Because this is, if you look at the banks, they've done heavy provisionings of loans, restructuring of loans. And so a lot of progress is going to happen in that front.
All right. And very good sentiments there, Mr. Odundo. And looking at the big picture, of course, we did see also some of the analysts coming out saying they are cautiously optimistic because of the simple reason that a second wave might be in the offing. Of course, there's a new strain of the virus, but they're saying it's less deadly. And the health authorities have also ensured that they're putting the right measures in place. But from where you sit, you did touch on a very important issue, that we are going into a pre-election season. Of course, there's still the medical crisis that is facing the country. Will we have the right momentum to ride the tide, especially now that we are seeing the government is actually trying to actualize most of the projects that it had pledged, because of course the elections are coming. We're likely to see more spending in the public projects. What does this portend really for the economy in terms of an uptick in economic activity? Will it be felt across the markets? Will it be felt to the common man?
I think first of all is to say that, as you rightly put, there are a lot of moving parts in the economy. On one hand, government has to continue with their programs of infrastructure development, of providing social amenities to Kenyans. On the other part, we have got the issue of the upcoming elections and some of the political issues that are taking place. But one thing I'm happy about, especially the political side of Kenya, I always say we've got a very strong political infrastructure. And you can see it at work. We have systems at work. the legislature, the executive, there are ways of accountability, people speak their minds, and that kind of thing. And that's very important to investors. Investors want to come to a market where they are sure that political stability is in place. They don't have fears that there could be changing policies that surprise them. And I think that that's happened very well. So all these issues that we are ventilating as Kenyans, I think is only good for us. Even how to improve the constitution. I think the ventilation is very, very important.
Okay.
And that's a good sign. It's a good vital sign for economic growth. So I think with that's going on one part. I'm not an expert in that, so I cannot comment further than that.
All right.
But I do speak to a lot of investors, especially international investors, and they're very happy about Kenya's macros. They're happy about how we are managing our key areas. First of all, we are a very diversified economy. We are not dependent on oil and all these other
specific sectors.
Yeah, sectors that are really causing swings in other economies. We are a very diversified economy. Agriculture is our base. We have got services now. That's becoming a key economic growth area. Manufacturing is being looked at and also growing. I know tourism has been hit, but again, we're still a very attractive tourism destination. And I can tell you, the other day I was looking at Airbnb listing, and that share price has really rocketed. And on the back of the vaccine being found, and on the back of recovery of the tourism sector, and that can just give you an indication of what can happen in Kenya once the vaccine starts being applied and tourists start coming back. So I think we sort of have a more resilient economy. Our currency, of course, has lost ground. It's about 7%, but it's really done well, I must say. Of course, as you know, we are one of the countries with a free-floating currency. We don't have exchange restrictions. And so that's been well. If you look at our import cover, I think we are very well cushioned. So all in all, I think it's a fairly good picture, and that's what investors are looking for. And so we continuously see good inflow of capital, especially for the international markets. Our market currently gets about 70% of our trading, 70% international, and that has been consistent. And that gives me a bit of encouragement, because what that does, it also gives local investors a bit of more confidence to also take part in the market, and we've seen that happen in 2020. A lot of local investor confidence. But that notwithstanding, is not to say that we should throw caution to the wind. I think we still have to remain vigilant on making sure that our sectors are protected. Government incentive programs must continue where they can. I think it's going to be very important for government to come with policies that help companies access capital post-recovery. I think we were looking the other day at the economic post-recovery strategy report of the government, and one of the things the government is saying, they want to look at the capital markets to look for alternative capital. Now, we are attractive. We actually are a very attractive source of alternative capital. Our pension fund sector, our life insurance sector, who participate in the capital markets, have got good pools of capital that need good products. So one of the things we're going to do in 2021 is really encourage listings, especially large corporate listings from the private sector, and even in government. So the government can also unlock some of its valuable companies in the market and gain two things. One, access long-term affordable capital, and secondly, enhance and strengthen the governance of those companies. We have good test cases of companies that were listed, previously listed corporations, and today are doing extremely well on the exchange. So there's a very good case for the government to raise close to 250 billion from the market.